Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Tuesday, January the 6th, 2023. A very quiet day. Started off with some promise. That didn't last very long. We had a couple of decent moves in between, but as we start here on the hourly chart with the NASDAQ, you can see that it never really amounted to much. Now, one change you're going to notice right away is that I did move the third wave and that fifth wave back from there, back up to yesterday's close. It's much cleaner. It does fit. That did work, but then it ceased to work any further. So we're back to a count that I have shown before, and that is that the high from yesterday did complete the minor third wave. So we got one additional extension out of that whole thing, and that happened last week into yesterday. Now, I was anticipating that we had the strong possibilities that the market actually would just keep on going beyond that, and it didn't. So it does fit to cleaner and more clean, I should say, along with the S&P also finishing its minute third at that high yesterday in the S&P, which we'll go over in a minute. So where are we? Again, if we finish the minor third, we're in a minor fourth wave. That minor fourth wave, actually, if we just go on regular or normal fib moves, we'd be looking for wave 4 to come all the way down to 0.382, which actually is kind of hiding behind this line. And so that's actually 13,900. So from where we are right now, that's basically, 500, 600 points. Now, can it do that? Yes. Would it still be considered a fourth wave? Yes, it would. But the reality tells me, like, if they can't even get the A wave started with any type of zest or selling, I mean, what it seems like that, after reaching 14,692, getting down to 14,495, so a 200-point drop, ooh, that's enough. And it may be, but it isn't. I just, to me, a minor degree has got to be larger than that. In fact, I'm going to continue to look for that. But what I think would become acceptable is a move down to where I've placed the 4, which is at 14,200. So a nice 400-point move. And don't forget, these rallies were pretty incredible. I mean, where the minute wave 4 completed was at 13,562. So it ran over 1,000 points. That was just the 5. The entire third wave is fairly large. So again, while we can't necessarily expect to see this gigantic rally fulfill it all the way back down in terms of a fourth wave, and then still be expected to rally, and instead of thinking if it got down to 13,900, we'd be of the opinion that's it, we're done. We should be, something will come out to really force the market to drop pretty hard versus running up to finish the entire fifth wave or the entire minor fifth wave. But then in terms of that with the intermediate C wave and the primary B wave. So again, what our focus has become is just how deep do we think we can get within this minor fourth wave. It is pretty shallow thus far. So there's two things that you can begin to think, that maybe indeed this did complete wave 3, and this is going to be minor 4, and we're now subdividing ourselves into oblivion within that minor fifth wave, yet to be determined. So to be honest with you, this is what's out there. And so we need to work with all things possible or not possible before, really putting a top in or even looking for how low can we go in the next decline. So I'm going to count it as leaving it here. I'm going to begin to look for this. Now, what can I add to this? we can go back over and we're going to try. I got to open this up just a little bit more so we can get in there and get it. We're going to go from this high. And we're going to add extensions. We're going to go down to today's low, up to that afternoon high. And we're going to take a look. So what we have is that the C wave, if we're saying that this is A and this is B, the C wave would be 0.618 at 14,500, basically. Equality, where C equals A, is at 14,433. 1.618, 14,316. But we can get further extensions down to this level, should it occur. That would be perfect. But basically, if this is going to be the fourth wave of one lesser degree, which actually it's not, I'd have to open this up just a little so we can take a look. Here's the fourth wave of one lesser degree. It's all the way down here. Now, if we got down to that level, then we would be touching the very top of that fourth wave of one lesser degree. So there's another call for it to drop all the way back down. Whether it does or not, we don't know. It's going to take something getting the plug or getting the rug pulled out from underneath it to begin to drop the markets down the way a normal, I hate to use the word normal, but the expected Fibonacci retracements would be reached. So in the meantime, these are what we have. Let me fill in, I'm going to open it up so that I can get our numbers in here. So bringing it down into the realm of reality. So here we have possibly A, there's the possible B. We're going to start to look for it to come off. I think we should at least C should equal A. So I'm looking for 14,433. And then a continuation, 1.618, 14,315. So we're still well above 14,000, well above 14,300 for that matter. But that's where we're going to look for right now for this wave to complete, this minor fourth wave to complete, and then begin the minor fifth wave. Now, again, our alternative is that we move the 3 down. This is the 4. And then I would continue to use this as a measurement for what can we look for within minor 5. But it's, again, it's pretty high. So I've got to let this play out a little bit more. Initially, we would continue to look at our resistance points, right? We have resistance at 14,692. That's our high, but that's where resistance remains via basically the 618 resistance. And that, I believe, is for the C wave. Let me go out a little bit further. No, actually, that's the minor 5. Nope, I'm wrong. Sorry, I got a lot of fibs up here. That would be for the primary B wave, would be 0.618. It would be a 0.618 retracement of primary A. That's what that level is, which we've actually reached. So on that level, our next stronger resistance comes in here. Now, what I can add to all this, and let me take this back, let me put it up there, and then I'll shrink the chart down. We still have just the C wave. What can this C wave look like? Okay, so now I'm going to take it back down so we can take a peek at all that we have inside of here. So we've added another level. So we have 14,706. That's going to be, again, the minor 5. And now we're going to move it up. Again, the minor 5. This is the larger B wave. This is the minor 5 again. So our levels are, there was the 100% being right here, 14,693, which we hit. So that is equality in terms of the minor 5. It is 0.618 in terms of the greater primary B wave. And we already met it. So a couple of ways we can look at this. We got to let this play out. But we have resistance, and it continues to basically hold. When we start to break that level, we're headed up. And then I'm going to have to be looking at some differences. And let me just let's bring this back open. And so instead of these going down, we'd be looking again at things going up. And right now, I don't have anything to anchor it to. So, but I do remember that we should have resistance. 14,706 would be our next level. That's very close to where we've already been. Above that, we know we're going to have resistance at 14,725, 750, etc. Just those bigger round numbers. And then 14,800. But in terms of fibs, comparing our wave patterns that are already in existence, we don't have solid against a minor 5 or the primary B wave, or actually the minor, the intermediate C wave, excuse me. That's what those are. I know there's so many going on that I'm even confusing myself. The C wave is here. Yes, that's what these are. These are the C wave. So that's a little bit more realistic. We have 1.236 because 100% where wave C equals wave A, that's the 100% was right there, and we surpassed that by a good ratio, a good amount. And so above that we have the next level up 14,700. The next level above that is 15,049. And then if it came in at 1.618, which is what this level represents, wave C would be 1.618 times the length of wave A at 15,592, or basically almost 15,600. That's quite a distance from where we are. Can it happen? Well, did we think this could happen? So I'd hate to say no, but it's not what I'm looking for. So again, bringing it back down, we got a lot of different levels. And now we got to bring that back so we can put a focus on what we got going on to get it taken care of tomorrow. So if we get this down, and maybe just to here, where I can get a clean ABC, get that put into place, and then begin to rally in that minor 5th wave, it's going to open up a lot of areas where we should start to look for a top. Now, let's not forget that we have until a week from tomorrow, until the Fed releases their decisions for the month of June. A lot of speculation, a lot of talk, not going over that right now. Our moving averages are all continuing, except for the 8, the 4, the 20, even the 50 starting to roll a little bit because today was more sideways than anything else. But we still got the 200s. And the SMA actually broke above the EMA, which is continuing to be supportive, but we have additional upside yet to come. Now, over in the S&P also, it's the same boat. It is exactly the same boat. But except it's 1 degree lower, where we finished the minute 3 as a part of that diagonal triangle for minor 5. So what we got going on here is we're looking for that 4. So here again, looks like we got the A, the B, and it almost closed right up at the top of that B wave. It's just pretty incredible to watch what they do here. And for it to turn back down, start to fill in some of these blanks. Now, again, not very big. The top was 43.05. We've gotten down to 42.68. That was this morning, pre-open. And then it just kind of traded inside. Got back to 42.93. And then just stayed right in a range for the balance of the day. I'd like to see this also come down 42.35 would be nice. 42.40 would be even better, but we'll take 42.58 down to 54. That would be a good range too. And I could put a minute 4 there and then set this thing up. All the way down brings us into here. All the way and let it overlap wave 1 would be the perfect triangle path, so to speak. But right now, I think this is about far as we can get, and then we'll do that minute 5. And the deeper it goes, the better for that minute 5 to hold within the parameters of the triangle. So that's really the case for today. It was kind of this inside day where we're kind of just waiting, waiting for decisions, waiting for additional news, waiting for something that's going to guide the market to its next level. So that's really about it. I don't have much more to be adding to this. Moving average wise, you see that they started to just kind of flatten out. The 50 started to roll and flatten. The 200s, they're still kind of angling higher because they take a lot longer. And the 4 and the 20 and the 8, they're all just kind of like the 8's kind of angling up, the 8 and the 4 are angling up, and the 20 is pretty flat. So not much to be talking about there. And we shall see what tomorrow shall bring. And let me just double check, because I think we may have a couple of things coming in tomorrow economic wise. On Wednesday, we have the U.S. trade deficit at 8:30 a.m. Eastern, and then at 3 p.m. Eastern, we have consumer credit. That could be an interesting one. It comes out at 3 p.m. That's kind of strange, but that's got a lot to say in terms of, the credit markets. So, but U.S. trade deficit should be a market mover. It'll give us something to go on tomorrow morning before the market opens. Okay. I'm going to end it right there. Our next update will be on Wednesday, June the 7th.